Morning, glory, America. Bonjour, hi, Canada. Hugh Hewitt live from Studio West. I've got David McCormick coming up, former CEO of Bridgewater, is going to join me. We're going to talk about the Silicon Valley Bank. But I'm beginning this hour with a sponsor. Ty Lasater is the CEO of KeyCity Capital, in which I am an investor. And he joins me when we have to talk about very incredibly complex financial things because Ty knows what he's doing. Good morning, Ty. How are you?
Good morning, Hugh. I'm great. Always good to talk to you.
Now, I've got to ask you, from the perspective of someone who raises money from people like me, people in our audience, they send you six figures or more, you buy apartment complexes, they get the upside and they get the check. It's pretty basic. It's a great concept. You've got a lot of demand. How did you view the Silicon Bank failure over the weekend? Were you at all worried given how you raise money and where you must bank all over the country, I assume?
Yeah, we bank in a number of different banks, definitely not in a online bank like that and the structure that they have, but it's scary is what it is. I mean, the Fed is definitely going to have to jump in there, and we're going to see major fallout from this. But I think what we're going to see is we're going to see continued scarcity amongst all banks. We're going to see a number of businesses start diversifying more so than what they already were across a number of different banks instead of having that traditional relationship bank that a business typically works with. I mean, it's nice to be able to know the CEO or the president of the bank that you work with and have that first name basis because it helps move the needle when you need to. But if it's going to come at the risk of having situations like this that could be looming in the background, then I think we're going to see movement away from that traditional structure.
You know, Ty, I was talking with a small businessman, much smaller than you, this weekend. They have a sweep account, and they can't keep their balances under $250,000 because there are too many balances. They're running a $2 to $3 million a month business. So it's not big, but it's not small. You're running a much bigger business. I assume you've got to have a different bank in every place that you own an apartment complex. Am I right?
That's correct. Most of the time, our lenders require us to have what's called a DACA account, and it's an account that it's a sweep account, but the lender has controls to that account if we are not meeting certain DSCR. So, for example, our revenue is supposed to be 1.2 times whatever our bank note is, and we have to report to our banks monthly our financial statements, and if in any period our income dips below that multiple, then they have access to the accounts to be able to sweep directly. And so they require certain banks to be used in those circumstances. And so each property typically has its own bank account. Every now and then when we buy a portfolio of properties, then maybe we'll have two or three that have a shared bank account. But most of the time, each property has its own bank account and the lender is dictating where that bank account is held.
So we've got a new affiliate this morning, for example, in Memphis, Tennessee this morning, Ty, 990 AM, 107.9 FM, News Talk, Memphis. This is the first time they've heard me talking about KeyCity Capital. Can you, for that benefit and other new listeners, review what KeyCity Capital does, and then I'm going to come back to the banking side of it?
Absolutely, and I can tie it directly to their market. We own 1,240 apartment units in Memphis, Tennessee. In the Germantown area, Germantown suburb. But what we do is we buy B and C class properties. That means it's properties that are typically more than a decade old. And it's workforce housing, cash flowing multifamily properties. So we buy those apartments, we go in, we typically do some sort of a value add process. We increase rents to market rate rent, and we hold that property for 4 to 5 years as we bring it to market rate. And as we do so, the investors that are involved take a share in all the cash distributions that come from the rents. And then when we sell the properties, the investors see a multiple on their capital. They get their capital back and typically turn around and invest with us in the next opportunity at that point.
And so what I tell people in Memphis and new listeners, the reason the Fetching Mrs. Hewitt and I invested with KeyCity is not because they are a sponsor, though they are a sponsor. It's because we wanted to park some money in a very safe place with an assured return of 8% or 7%, something like that, and an upside at the end. And so you must deal with a lot of banks. I don't know. Can you estimate how many banks you deal with, Ty?
Oh, man, I bet we're at 18 to 20.
Yeah.
We've got most of our business accounts are at two banks, but then, like I said, each property or portfolio of properties has its own bank account. And now a couple of those properties share the same bank that we utilize. But so individual accounts, we have like 90 individual accounts, but I think we work at 18 or 19 different banks.
So over the weekend, you're obviously, you've done how many closings? People may not know anything about this, especially if they're a Steelers fan. When you buy a property, there's going to be a closing. The closing is going to be complicated. The bankers and the lawyers are going to be in the room. Did you hear from any bankers this weekend? Did you call any bankers this weekend? Are they enormously relieved at what happened?
I talked to our private bank. And they are definitely relieved of what happened. They are expecting to see further oversight come in, much like we did with the SEC structure around investment companies after unfortunate events like Bernie Madoff happened. They're going to see additional oversight and scrutiny. I would imagine there's going to be more audits than what have typically been done in the past, and regulators are going to look for more assurance. But I mean, at the end of the day, our primary bank here in Dallas was hugely relieved, but they are, I think, in a whirlwind of what's going to happen next and how is this going to affect them.
Well, there are a number of banks that are going to lose a lot of value today because people are afraid that everyone's going to dump regional banks and go to the big four. You're not going to do that. I mean, you need a relationship with a bunch of smaller banks. It's just that simple.
We've been with the big four before, and it was a nightmare for a business like ours. I mean, you were bringing up closings, and I was hoping you weren't going to ask me for a specific number because it's north of 1,000 closings that I've done. But when doing that and moving money as much as we were moving, each time we close, we have investor funds coming in, we have investor funds and distributions going out every month. It was so difficult to work with the big four banks because we had wire and ACH limits. But in order to increase those limits for closings, we had to physically go into the bank and increase our limits. We had to sign documentation to do that. But when we saw through COVID what happened, the banks closed down. You couldn't get a meeting. And so we were having to sign up for meetings 3 and 4 weeks in advance to go in and be prepared to increase our wire limits. But if a closing were to change and move from 1 day to 2 days later or 2 days earlier, and we hadn't already had that meeting set, then there was no way to get that done. And it was just a nightmare trying to deal with the big banks like that.
Now, I want to tell our listeners, if you're interested in stability, go to keycitycapital.com/Hugh. Get the prospectus, read the prospectus. I don't know what fund number you are. I'm way back in fund number 3 or 4. I can't remember which fund I'm in. You've opened a new fund. What number is it, Ty?
We've got Fund 11 right now that's open, that's about to close. And we're about to open Real Estate Fund 12. You're actually 2 funds back. You're in Fund 3, but we had some lending funds in between the two. Which is why the increased number, and it's not just Fund 10 that you were in. So anyways, we're opening Fund 12 next month, I believe. We've got Fund 11 that we're closing right now as we speak. And we've already got our Fund 12 first asset targeted. So I'm excited about that.
So tell me, do you feel in the chaos of the headlines that real estate remains a stable? I just think it's the most boring, wonderful, vanilla investment that I have because people got to live somewhere and they want to live in a B or a C class apartment that's taken well care of.
It is. It's the most stable thing that you can be in. I will say the returns are not going to be as high as buying a business right now. There's so many businesses that are looking for an exit in this market. You've got baby boomers looking to retire. And so oftentimes buying a business, you'll see higher multiples in an economy like today. Which we're going to start focusing on a number of businesses to acquire that we already have similar businesses in our portfolio. But with that, multifamily and real estate, what happens when interest rates go up is leverage comes down. So when we were used to borrowing at 75% 9 months ago, we're going to borrow at 65% today. So the risk to investors goes down because we've got lower leverage, but the return goes down a little bit as well. It's still going to continue to be a strong play. That's what we're continuing to do. You don't see cash flow in any other industry like you do in real estate. And we love that aspect of it. It's that cash flow mixed with the growth.
So do I. That's why I'm a customer. Ty's Lasater, KeyCityCapital.com/Hugh. KeyCityCapital.com/Hugh. Thank you for the perspective of a not so small businessman on our banking turbulent times. Thank you, Ty. Coming right back, America. Stay tuned.